This is VBS, the Virtual Blockchain Summit. Welcome to all of you from Canada, United States, Europe, and around the world. I am Adrian Sischin, coming to you live from Calgary, Canada. Let me see if we're live here, just to quickly check with my friends. Okay, we're on. So this is VBS, the Virtual Blockchain Summit. Looks like it's a little bit of a background noise, so hopefully now we are good. Welcome everybody. The topic of today's panel, scheduled for this time of the live summit, is equity versus token investments. So let me introduce our speakers today. Jana Leonova, Vince Kohli, Arseny Klekovkin from Gian Futures, Henri Arslanian from FinTech Associations. So welcome everybody. And I would like to allow everybody to quickly introduce themselves with some of the projects that you are working, and then we're just going to get right on to it. Henri, please go.
Guys, first of all, thank you very much for having me. Very, very excited to be here. My name is Henri Arslanian, and really my passion and my focus in life is the future of finance and money. And I'm lucky to do this in many different ways. One of them is, as you mentioned, as a chairman of the FinTech Association of Hong Kong. A second hat that I wear is at the PwC, where I'm a partner in the Global Crypto Leader, where we have crypto teams across 20 countries around the world. And obviously, my third hat, very important, is that of a professor, where I teach the first FinTech University course in Hong Kong. And my fourth is actually very involved in policy making and advocating, including my last book called The Future of Finance, and very trying to bring more awareness and best practices within the crypto ecosystem. So very excited to be here and having the chance. Thank you for giving us a chance to share our passion about the future of money with all of you today.
Yana, we'll leave it up to you. Pass it to you.
Yes, hello everybody. I'm happy and I would like to greet everybody, including the moderator and the my panelists, and I would like to introduce myself. So my name is Jana Leonova, and I'm a pure cosmopolitan with the experience of living and doing businesses in the UK, United States, Switzerland, Russia, and last 2 years I'm based in the UAE in Dubai. So just over 3 years ago, I became fascinated by the blockchain tech world in general while I was managing fundraising for some startups in London. Shortly after that, I have completed the blockchain strategy course in Oxford. And since then, I have been engaged in blockchain and security tokens and digital space. And currently, I'm ambassador of the private investment group. We are based in the UAE, in Abu Dhabi, but we are mandated by various funds and family
Arseny,
offices.
From GI Ventures, if you can please introduce yourself.
Yeah, pleasure to be here. G1 is an active venture investor focused primarily on blockchain and fintech. The core of our portfolio are projects that actually enable adoption of digital securities. Examples include like neobanks, custody, RegTech providers. So we tend to go deeper rather than wider, so getting involved operationally and leading the rounds for our companies.
Okay, and finally, Vince Kohli, welcome. I'm not sure if you can hear us. We can see you at this time, but hopefully you'll be able to hear us and join us. I'm not sure if you have the camera open.
Can you guys hear me?
Yes, you're on.
Awesome.
But we can see you. We can hear you, but we can't see you.
Yeah, I don't want to take time on this because I have some virtual background and it's messy right now how it's coming up. So I'd like to quickly introduce myself. My name is Vince Kohli. I'm a Silicon Valley venture capital investor, a 6X tech entrepreneur, and serial business builder. What I'm really passionate about in a blockchain space is enterprise blockchain product design development and on the cloud. On the cloud. At the same time, I actually help early stage deep tech social impact entrepreneurs to scale up in Silicon Valley by giving them the check size up to $250,000. And these kind of investments do happen approximately 9 to 12 times in a year. My previous backstory, I was with Accenture. I was investor relations with multi-billion-dollar funds, a high-frequency trader at Wall Street, and a product design thinker. So thank you very much to be on the panel with all the esteemed panelists.
Thank you. Thank you so much for each and every one of you for investing your time to come over to the first tokenized event in the world. And now let's just get it started. We certainly feel that we are in good company. Here is a question, and I will ask probably Henri about this, is as we talk about equity type of investments and token investments, why do you think that companies ultimately need to get into this tokenization process?
Yeah, I mean, so I think it's a very, very interesting, obviously, what we are seeing when it comes to broader tokenization, right, happening around the world. I would say a couple of big benefits. If I would put my lawyer hat on, when we come about tokenization, obviously, when we talk about a lot of the big assets today, there's obviously what we call an illiquidity discount. So if, I have a big building, there's only X, in Mayfair in London or in Fifth Avenue in New York, there's only a set number of people who can buy this, such a large piece of assets. The beauty of tokenization allows us to actually not only create a bit more liquidity, potentially, in a lot of these large liquid assets, but probably most importantly, again, what I find a bit more exciting is really be able to change how these companies operate. For example, when it comes to corporate actions, when it comes to corporate dividend payments, for example, frankly, with a tokenized platform, with security tokens, the idea that we have right now, a quarterly dividend or annual dividend, really nothing stops us to actually make these payments on a monthly, daily, hourly, or even live perspective, the technology allowing it from that perspective. But I think it's very interesting what's happening on a broader tokenization perspective. That being said, I think there's still a lot of challenges, despite all the buzz that we are seeing around the world on tokenization, all the buzz that we are seeing on security token offerings and the likes. I would say that I've been even personally surprised of how we are seeing the industry move probably a bit slower than many expected it. Not only on the technology side, where things are actually pretty advanced, but also I would say, especially from an investor interest perspective. The irony is still that a lot of even crypto companies, when they're raising money, whether it's a seed, Series A and other series, they're still doing it in the old school traditional way without probably leveraging some of the tools that we have today. So it is what it is. But I think from a very interesting developments, but I think moving a bit slower than many of us expected.
Thank you, Henri. So to go to a little bit in line with the tokenization, which ultimately relates to trust, especially now when very few people are able to meet other people. I think we're living into a post-COVID type of era. I was going to ask Henri, what do you think about the risk of companies in this moment associated with this tokenization process to pretend to have utility tokens, and in reality they end up having actually security tokens, and then you end up buying a security, so all of a sudden you feel exposed. So if you want to comment on this.
Sure. No, I think I think there's a big difference. Obviously, everybody in the crypto community went 2-3 years ago when we had the big boom of utility token and security tokens, and frankly, suddenly everybody became an expert on the Howey test and thought they had an explanation of legal interpretation. Unfortunately, I personally think that the situation is still quite sad. I still see a lot of token projects launching, and frankly, where people trying to offer incentives that are very equity-like. And let's be very clear on this. Over the last year, there was a lot of investigations from securities regulators around the world on projects that were actually breaching various securities laws around the world by basically offering tokens that were actually securities. And I expect that to continue. And frankly, I think for the benefit of the crypto ecosystem, We need these bad actors to actually be penalized and actually because they give a bad name to the industry. And a couple of things we also need to understand is also the other one I've been following a lot is exchange tokens as well. I think it's very interesting that a lot of companies a lot of exchanges even are issuing tokens, but generally I think we need to make sure that these are pure utility, with a utility function. Unlike if you have any features that are linked to your revenues, that are linked to your profits and others, I think it's a very gray line that these companies are going through, and I think this is very and we should not underestimate that any incident that happens to any token or other digital asset, whether you like it or not, will have a negative impact, not only on the crypto ecosystem, but on the broader world of digital assets, and that's definitely not a good thing.
Thank you, Vince. What is your take on the token investment environment today?
Thank you for the question. I think one of the most compelling uses of blockchain technology is the ability to reliably record information, verify when and where it was added to the network. This feature, combined with the ability to synchronize a ledger, means that all parties can get the same information at the same time and have confidence in the truthfulness of that information. The result has been a rush to treat blockchains like digital notaries, recording truthful information and sharing it around. So it is useful, but has a little bit of limitations. When knowing when and where a product was made, an interesting ability to trace the history. This has been very truly realized in something, in medicine, I think in a complex and valuable package of medicine. But however, by creating a digital token to represent the package of medicine, not only we can record the history of the medicine, just like a digital notary solution, but we can buy and sell them moving tokens between accounts. So quite simply, I think economy is going to be tokenized. Using digital tokens, we can recreate all the sophistication of existing financial and operational business world we live in, but far less operational cost and complexity with the same system. The future of business contracting, if we believe the exchange of product and service, tokens for digital payments. So I think it's not only the banking, there are, I think, 50 other industries which are getting tokenized, and the road to tokenize is going to be very, very mature. As the token economy matures and companies put more and more assets, products, services into public blockchain, expect the delivery of the complex financial services to be digitized as well. And it starts with banking, but there are, I think, approximately the last research I did was in March 2020, there are 58 industries getting tokenized. So thank you again for asking that question.
Thank you, Vince. Arseny, how do you see in this moment Juan Ventures and yourself investing? Would you prefer an equity traditional type of investment, or a tokenized type of investment? And when do you see this moving forward?
It really depends on what we're looking at. In terms of our focus, as I said, we're not so much looking at protocol layer. We're more looking at infrastructure, that project that would enable others, and our focus more on the business model, on the credible kind of business plan, and how they can gonna actually launch and do stuff. So for us, the logical route to achieve this is traditional equity and kind of traditional route to invest. Yet, if we talk about the tokens, obviously STOs hold a lot of promise, but we all know that there is not enough liquidity. The infrastructure is kind of still emerging and not yet accepted. And generally, what's also quite important, the awareness of it and the comfort that people have is not yet there. So in my view, the way it can develop is that it has to start from utility tokens. And if we talk about utility tokens, we look at what can really be tokenized. In my view, one of the key parameters would be if this asset or right has a secondary market. If it has a secondary market, then there is a natural need and it fits a lot better. And in this respect, I would think that the rights would be could be more easily tokenized. For example, let's take tickets. I think that it's already starting to happen, and that is quite easy to implement, and that creates a lot of efficiency. And then we can move on to assets. For example, let's take car, like really kind of ownership of the car, and how you manage the car, and how you can unlock it, on do something. Now all the producers, they kind of create some sort of applications, but that can be you can have a unified standard, and you can have then the secondary market with it. So, and then we can slowly move towards the kind of tokenizing assets, rights to those assets. And as this starts to evolve, as there is kind of the whole mechanisms and awareness grows, that's when it would be natural to rise up to security tokens and move all the finance and payments and the stable coins. So I would see this progression like in this. So we start with things that naturally fit, where there is kind of maybe less monetary value, and the importance of the infrastructure is not that critical, and then we move to more valuable stuff.
Well, thank you, Arseny. Yana, to bring it up to you, as you are working in this moment with the private investment group, I would focus on the first word of the group, which is private. How do you see the private element, including confidentiality, including compliance in the same time, in the security token environment? What do you see taking traction in your neck of the woods?
Yes, we are the private investment group, but we are working with institutional clients. We are mandated by institutional clients from the Middle East. And that's why we are raising funds traditionally. It's via equity. So our institutional clients still invest via equity. And I would say that price volatility and regulations are really like the top concerns of institutional clients. So even though I read recently a report of Bloomberg, they were citing one survey that 1/3 of European and American investors, institutional investors, they have invested into digital assets like Bitcoins. It's still not the case for around the world. Me personally, I strongly believe in digital assets, and I think it's like a very logical step of just the growing of economy. We all have now digital wallets. We are allowed now to make digital voting. We have like the sharing economies, like the concept of today. So that's how it just develops. So I strongly believe, even though tokenization is still a very immature concept, and of course there are a lot of gaps to fill. Regulation is not there. Secondary market is really suffering big time, in my opinion. Blockchain system don't communicate to each other, so they need to have like interoperability. But in general, I believe that the progress is there, and tokenization allowing us kind of participate as a crowdfunding, to raise funds via crowdfunding, because like fine art, real estate, some kind of commodities like gold and some jewelry and even some expensive watch that are just like unable to be regarded as an investment for like ordinary citizens. They can be regarded as crowdfunding platforms, via crowdfunding instrument for ordinary citizens. We just need to kind of arrange the infrastructure and just fill some gaps around this.
So I would sense that clearly, within your group and your organization, you are focused obviously on the traditional type of equity. And I was going to come back to Henri on this one, as he is a strong promoter of crypto. But in the same time, even though we are scattered in so many places around the world, I couldn't sense but you agreeing with Yana that probably the industry is not quite there yet. So how do you square in this moment your passion to crypto, and what do you think it could be done to start bringing institutional investors on board? And what do you think is needed ultimately for this tokenized environment, tokenized investment type of environment to truly pick up?
I think just want to clarify a couple of points. First of all, I think that there is definitely an increase in institutional investor interest in the digital assets world. I mean, let me give you two examples. In the equity world, we publish a report every 6 months on global crypto M&A and fundraising trends. Just according to our last report that came out about a month away, you can find it on my LinkedIn or on the PwC website, PwC crypto website. I mean, today, 57% of investments in crypto companies are traditional VCs, crypto-focused VCs, or family offices. And actually, one of the big trends we are seeing right now is a rise of interest from family office, especially in Asia, actually within the digital asset space. Where I agree with Yana is actually that we are definitely, a lot of these investments are happening by equity investments. So these are not happening by security tokens. They're not happening by tokenized investments. They're actually equity investment in a traditional way within these crypto companies. There's also, I would argue, also an interest in broader cryptocurrencies and crypto assets by not only the general public. We are obviously seeing a number of wallets go up on a quarter per quarter basis, but also I would say within the institutional ecosystem as well, for a couple of reasons. One is regulatory clarity, like you mentioned. You're absolutely on spot. Today, only 5% of regulators, according to Cambridge University, do not have somebody working on crypto. So 95% have somebody working on crypto, which is actually great. The crypto industry is probably the only industry that actively lobbies to have more crypto regulations, to actually provide certainty in the market. The one thing I would say that's now deterring a number of institutional investors, it may sound very stupid, but it's actually tax. As you know, over the last 18 months, 24 months, we made tremendous progress when it comes to crypto regulations. However, tax perspective, we're still not there. Even on crypto funds, some of the most basic, often the entry point for investors, unfortunately, there's a number of tax issues. And again, we published a report on this as well. People can find it. The second thing I would mention, though, is also we are lacking an institutional grade offering in many providers. For example, you know, a lot of the custodians, exchanges right now, they're getting what we call third-party certifications, which are equivalent to what the banks are getting. This is what you hear about. People hear about SOC, system operational controls reviews, TOC 1, Type 2. This kind of reviews we are seeing. So I think as these are happening more and more, we'll see more, give more comfort to institutional investors and the auditors and everybody else. And the last and final point, frankly, it's all of us in the crypto ecosystem. You know, I think this industry is driven by people, and the industry needs to upgrade its game when it comes to policies, governance, controls. You know, from stuff that we saw, from Quadriga in Canada, to some of the other hackings that are taking place, to some other basic events. I mentioned Quadriga because I know you're an Adrian, you're in Canada. I think it's unacceptable that we are having some of these incidents happen, right? I mean, there will always be cyber hacks. You know, there will always be cyber attacks in this space, for sure. But I think we need to have a level of governance, transparency, and actually best practices, because until the regulations come there, the industry needs to upgrade. And that's very important for ecosystem to go from 1.0 to 2.0.
Well, thank you. I think it's a great point. So to come back to you, Vince, and then in line with the idea of trust and transparency, which probably fuels business, who would you trust? Where would you put your money? Should that be a token investment?
Yeah, I believe it has to be a token investment, primarily because tokens, digital tokens, are designed for economic activity. So whenever you create something, you have to design for a specific outcome. In this particular case, it's for activity, and the blockchain are actually ideal for handling them. I'll give you a perfect example. If you look at JP Morgan is entering into a blockchain space. It's called JPM coin, which is basically intends to use and facilitate transaction between institutional accounts. So that is why it is growing, because it will reduce also the cost of cross-border transactions, and that's why the crypto world gets united. And that's where financial institutions like Western Union, they improve the cross-border payments. So more and more people are, it is just somebody taking a lead, I guess. So I think the JPM lead on the banking sector with JPM coin takes that particular lead, and some people are just followers.
Well, thank you. I think you brought a very interesting point. As we are looking in this moment at the global presence and with the regulations and the securities being so much all over the place, I have noticed sometimes projects that are purely carved out from certain jurisdictions. Arseny, in Europe, in your neck of the woods, what do you see happening? What do you see picking up from an investment standpoint in the token sphere?
I think like if we talk broadly, not only professional kind of highly people who understand it quite well, but also retail, maybe family offices more broadly. What I think will be happening very shortly and is already happening is a kind of stable coin with a promise of some high yield. With everything, like if we and this is what should be quite an attractive feature, and some of the projects already started implementing it, and it's kind of quite available in anything that connects to DeFi. So in my opinion, that would be step number one, and then through that, that would be kind of something that would attract more users, and that would kind of grow the user base of the existing projects. The next one would probably be something like some investment strategies realized through tokens. For example, like token set could be a good example. Essentially, creating not only just a simple kind of a replica of a bank deposit, but with proper yield, but already some kind of investment strategies and some pools of assets. So that would be next. And then if we look beyond that, in 1 or 2 years, I do truly hope that the projects that use blockchain would start would be in a good position, and the market would be ready for them to start issuing security tokens.
Well, thank you. I think this kind of concludes our panel today. I just want to say thank you for each and every one of you. And please stay with us. We are up to the next session. Please stay with VBS Don't Live, and have a good one for each and every one of you around the world. Bye-bye.
Thank you very much. Bye-bye.
Thank you. Thank you.